$10 billion for private jet parking. I love it. Apollo buying Atlantic Aviation from KKR is peak private equity land grab.
Peak bubble, you mean? Meanwhile, Allbirds just sold for $39 million. Remember when they IPO'd at $4 billion?
Oh, come on, you cannot compare ultra high net worth infrastructure to wool sneakers.
I can and I will. But fine, let's talk about the real drama. Did you see the Unilever and McCormick rumor? The rundown. I just want to know who is still wearing those thick wool sneakers in 2024.
Hey, I am wearing a pair right now. They are very comfortable.
I am so sorry to hear that. But apparently American Exchange Group agrees with you because they are taking Allbirds private for $39 million.
The ultimate DTC reality check? The stock skyrocketed 30% on the news, which is honestly just depressing. 30% of a penny stock is still a penny stock.
Nate, they were valued at over $4 billion at their IPO. A $39 million exit is a 99% haircut. I read the latest filings this morning, and their cash burn was so severe they basically had to hand over the keys just to keep the lights on.
Sometimes you just have to take the loss. Speaking of writing checks, Carlyle is taking a majority stake in MAI Capital Management. The deal values the wealth management firm at over $2.8 billion.
Pure AUM hoarding. Private equity loves wealth management right now because it is incredibly sticky, recurring revenue.
It is the ultimate hedge. Carlyle gets to clip fees on top of fees, but if we are talking about growth, Grab is finally stepping out of Southeast Asia. They are buying foodpanda's Taiwan business for $600 million.
I actually hate this deal for Grab.
Wait, really? Taiwan is a high-density market.
It is a completely saturated market. Uber Eats already has a massive footprint there. Grab is paying $600 million just to be a distant second in a geography where they have zero operational synergies. They should be defending their home turf, not buying someone else's leftovers.
You are looking at it like an operator, Maya. Look at it like a banker. Grab needs a new narrative. They cannot just sit in Singapore and Jakarta forever. $600 million is a relatively cheap entry ticket to prove they can expand regionally.
A cheap ticket to a bad movie. We will see. Give me a deal where the premium actually makes sense.
How about Eli Lilly snapping up Centessa Pharmaceuticals? Up to $47 a share. Centessa stock popped 47% today. Big Pharma is officially tired of doing its own R&D. They are just paying top dollar to buy clinical pipelines.
Which perfectly explains why Blackstone just officially closed its record-breaking $6.3 billion life sciences fund. The private markets know Big Pharma is holding a massive checkbook right now.
There is so much dry powder out there. But if you want to see where the real giant checks are being written, we have to look at high-end infrastructure.
And maybe talk about some very spicy rumors in the grocery aisle.
Oh, the Unilever and McCormick whispers are getting loud. But first, we need to talk about Apollo's massive $10 billion play for Atlantic Aviation. The big one. $10 billion for what's essentially a string of gas stations for billionaires?
You're oversimplifying, but you're not completely wrong.
I mean, think about it. Atlantic Aviation runs FBOs, fixed base operators. You park your Gulfstream, they pump the jet fuel, they vacuum the carpets, and they charge you an absolute fortune for the privilege. And Apollo is writing a $10 billion check to KKR to own that.
And KKR is probably doing cartwheels in their boardroom right now. They're flipping this asset for a massive premium.
It's a premium, sure. But look at the landscape. This is a pure infrastructure land grab. The commentary all morning has been about how private equity is just desperate for these ultra high net worth service assets. You can't just build a new private terminal at Teterboro. The moat is infinitely deep.
A deep moat doesn't justify paying $10 billion at what looks suspiciously like the peak of a cycle.
You think private aviation is peaking?
I think the post-COVID private jet boom is stabilizing. If you look at the industry data, flight hours are flat to slightly down year over year. Apollo is buying in at the absolute top of the market narrative. They're pricing this deal like jet fuel demand is going to grow double digits forever.
See, my banker brain strongly disagrees with you here. They aren't buying a growth tech stock. They're buying a monopoly on parking spots for the global elite. If you're Apollo, you have a massive pools of capital that needs safe, yield-generating homes. Where else are you going to deploy 10 billion right now with that kind of downside protection?
Downside protection? If corporate travel budgets tighten, the first thing a CFO cuts is the fractional jet hours.
The people flying out of Atlantic terminals aren't worrying about their corporate travel budgets. They own the corporations.
Okay, fair point. But I looked at the probable financing structure. The debt load required to fund a $10 billion buyout in this rate environment is staggering. You're looking at hundreds of millions just in annual interest expense. Apollo has to squeeze serious operational efficiencies out of this to make the math work. Or they have to aggressively acquire smaller operators and roll them up.
They'll just raise the price of a coffee in the lounge to $400.
They probably already do. I just hate the phrasing. Calling this premium infrastructure. It's luxury services masquerading as infrastructure so they can justify an infrastructure multiple.
Call it what you want. It's a monster exit for KKR. And it proves the mega buyout isn't dead.
We'll see how the debt syndication goes before we crown Apollo the king of the tarmac.
Always the skeptic.
Always reading the footnotes. Speaking of massive deals, I want to completely switch gears. We need to talk about the spice aisle.
Oh, yes, we do. The consumer staples sector is losing its mind over this Unilever and McCormick rumor.
A global food giant merger is exactly the kind of chaos I'm here for today. Voices. I was reading the postmortems on the Allbirds deal this morning, and the consensus is brutal. One analyst called a $39 million buyout a, quote, stark reality check for the former DTC darling.
Stark reality check is putting it mildly. They went public at what, over $2 billion? Now, American Exchange Group is picking up the scraps for $39 million. That is not a haircut, Maya. That is a decapitation.
It really is. But what gets me is the surprise from the industry watchers. If you looked at their unit economics for the last 6 quarters, they were basically subsidizing people's wool running shoes with venture money. The reality check was long overdue.
Fair, but contrast that $39 million reality check with what analysts are saying about Apollo. The quote going around is that Apollo's $10 billion play for Atlantic Aviation underscores an ongoing PE land grab for premium infrastructure and ultra-high net worth service assets.
I hate that framing. Ultra high net worth service assets makes it sound like Apollo is buying a luxury concierge. They are not buying this because they want to pamper billionaires.
Wait, Atlantic Aviation literally fuels and parks private jets. That is the exact definition of pampering billionaires.
No, it is a pure infrastructure play. Look at the real estate footprint. Atlantic controls the leases at over 100 airports. Apollo is looking at the captive market, the massive barriers to entry, and the predictable cash flows from jet fuel margins. They do not care who is actually sitting inside the Gulf Stream.
Okay, I see your point. The land underneath the jet is the real asset. But you have to admit, $10 billion from Apollo to take it off KKR's hands shows they are willing to pay a massive premium for that dirt.
Oh, absolutely. It is a huge multiple. Almost as massive as the multiple we would see if this massive consumer staples rumor actually happens.
Oh, you mean the whisper that someone is trying to spice up the mayonnaise aisle? Spill the tea. I'm telling you, the consumer staples bankers are not sleeping this week. The whispers about Unilever and McCormick are getting deafening.
A global mayo and spices super conglomerate, please? The antitrust regulators would have a field day before the ink even dries.
You always go straight to antitrust. Think about the synergies, Maya. Unilever needs flavor, McCormick needs global distribution. It is a match made in grocery heaven.
I am looking at the potential overlap in their supply chains right now, and it is a complete nightmare. Plus, Unilever is already trying to spin off its ice cream division. You really think they want to swallow Old Bay seasoning while trying to execute a massive internal restructuring?
Hey, do not disrespect Old Bay. I would drink that stuff straight. But fine, if you hate my grocery gossip, let us talk about the Saudis throwing money at ByteDance.
Oh, the Savvy Games Group rumor. $6 billion for Moonton. Now that actually has some legs.
$6 billion. ByteDance bought that gaming studio for what? $4 billion just a few years ago? Now they are cashing out at a massive premium while dealing with all their TikTok drama in Washington.
It is actually a brilliant strategic retreat on ByteDance's part. They realize mid-core gaming is not their primary moat, so they flip it to Savvy, who has a bottomless checkbook and a mandate to build an esports empire.
Exactly. Find a motivated seller dealing with political headaches and write a check so big they cannot say no.
I am just surprised they are getting a $2 billion markup in this macro environment. Someone over at Savvy really wanted that mobile gaming revenue.
$6 billion is definitely a lot of cash to park somewhere. Speaking of parking massive amounts of cash, are we ready to talk about where the real billionaires park their toys?
You mean Apollo dropping $10 billion to buy Atlantic Aviation from KKR?
Oh yes, the ultimate private equity land grab. Tomorrow's radar. I'm watching the clock on Sony tomorrow. If they actually ink this rumored $1 billion home entertainment deal with TCL, that changes the hardware game entirely.
$1 billion? Oh, come on. I'll eat my microphone if that prints at a full billion. The margin profile on that hardware is terrible right now.
You're just looking at current margins. Think about the supply chain leverage. Sony needs TCL's manufacturing footprint.
I need to see the term sheet before I buy that narrative. What I'm actually watching tomorrow is the Yesway IPO filing.
Convenience stores? Really? After we just spent 20 minutes talking about a $10 billion private jet buyout?
Hey, people need their taquitos, Nate. The cash flow on regional gas station chains is historically bulletproof. I want to see how they price it. Plus, we're waiting on regulatory updates for Mundy's buying that extra 6% stake in GetLink.
Fair enough. I'll take private jets and Sony rumors. You take roller grill hot dogs and European infrastructure.
It's a highly glamorous life. We'll be back tomorrow to see who was right.